India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call, beginning a new week, and this is an important one. Not that other weeks are not, but this is especially important because it also marks the culmination of this long-running elections over 50 days now, and that comes to a close. And then on Saturday, which is towards the end of the week, we get the exit poll results, and next week, early next week, is the election results. Markets are doing just fine. They're near or at all-time highs. I'm Prashant. With me, my colleague Sonia and Nigel. Guys, good morning.
Hi, good morning, Prashant. Good morning, Nigel. So, big week, the last trading week before the all-important election results, a once-in-a-5-year event, right? The market is going to react to. But the good part is that we've been clocking highs, record highs, and later tonight, the US markets will be shut, so no cues from them.
Well, that's right. And I don't know whether any of you watched the IPL finals yesterday. It was a bit of a damn squib because,
damn squib, yeah.
the team that was chasing finished it up in 10 overs. Yeah. So we had plenty of time post that. But now all eyes on the World Cup as well. So that's about sporting action, but we'll focus on the markets for now.
And, markets are in fine form, right? And we are going into the election results at record highs, pretty much at record highs on most indices. So sort of let's, begin by telling you some of the cues which are most important. So point number one, markets, especially the Nifty, of course, made a new all-time high, 23,000. It's in uncharted territory in that sense. Bank Nifty lagging behind a little bit, but near all-time highs as well. That 50K mark after Nifty's 23, 50K on the Nifty Bank is what people are eyeing. Big week ahead, as we said, with election sort of exit polls on Saturday, and then, of course, results on Tuesday, which is the first exit polls, fourth is the election results, which means that, it's always going to be interesting, into it, out of it, and, of course, once the market will react on Monday to the election exit polls, and then, the final sort of numbers, the tally, etc., which comes on the 4th. FII intensity, selling intensity, maybe, it's too early, but just sort of last couple of days, it's reduced a little bit. They sold on Friday again, but Thursday, of course, there was that big buy number, and Friday's selling number was large enough, but, relatively speaking, as compared to the last few days, not that big. Massive short covering in index futures continues. And this we highlighted on Thursday, and it's continued into Friday as well. So as of Friday's close, FIIs are now net short only about some 16,000, less than 16,000 contracts. This number as of Thursday was 98,000 contracts, from 98 to 16. So that's a massive covering. And by the way, so Wednesday was near 2 lakh contracts. 2 lakh became 98, and 98 has now gone down to 16. We was making this point on Thursday and on sort of Friday as well, that when you bounce from very extreme levels, and this was one extreme, a little over 2 lakh odd contracts short, typically it goes into neutral, and then sometimes it goes into the other side, on the other end of the spectrum, which is net long, and it sometimes goes into an extreme phase as well. We're not there yet. We're kind of evened out with this covering we saw on Friday. Okay, U.S. equities on Friday ended higher. S&P was up about 3/4. Nasdaq was up about 1% as well. So decent cues out of there. The 2-year is, by the way, the U.S. 2-year yield is at about 4.95. So the only reason I'm highlighting that is because it's inched back closer to about 5%, whereas the long end of the yield curve is still hovering around 4.5 odd %. So it's kind of flattening. The yield curve is flattening. You've got dollar index, which fell back under 105. So it hit 105, but now sort of comfortably under that particular level. That's good. Oil prices still hovering around 81 to 83. So we're at about 82 odd dollars a barrel. The 100-day moving average is 83.7. So, I mean, technically, if you're looking at, a level close by, that's perhaps the most relevant one. Sonia said, I mean, U.S. markets are shut, so there's not very much to take away when we come back tomorrow from a global perspective. So where does this leave us in terms of sort of levels on the Nifty? Resistance is on the trend line, which is basically joining the previous highs, and that meets the Nifty at about 23,125. And then you got to look at the monthly Bollinger Bands, etc. once this level is taken out. So 23,125, first number. Support comes in at 22,586. I mean, the market's run away a little bit, so there's a bit of a gap here, but 22,600 roughly is where the first supports start to come in. Bank Nifty is lagging behind, but it did now finally on Friday close comfortably above the 61.8% retracement. That level is 48,832. Immediate resistance is 49,334, which is the 78.6. And then, I mean, you basically have got all-time highs just under that 50,000 level. This on the way down, supports come in. The hourly average closest is 48,332, which could be used as a bit of a trailing reversal stop for the Nifty Bank. GIFT Nifty will come up on your screen. I think the rest of the Asia, etc., is doing quite okay as well. We're up about 17, 18 odd points, a little tentative to begin the day and the week as well. Sonia.
Absolutely. And I think, this market is going into the elections very strong, right? I mean, at all-time highs. So I guess in that context, the expectations are a bit on the higher side. That's the only problem. But other than that, this is a big week for the market, as we've been saying. Last full trading week before we get into the election results. How do you approach the markets? The Nifty and the mid-cap index are both trading near all-time highs as we speak. But the big focus area for me is the Bank Nifty. Now, let's not forget that the Bank Nifty is now just 2% away from its all-time high. So, my eye is going to be on which way the Bank Nifty heads. In all likelihood, there will be a lot of participation from heavyweight banks. So HDFC Bank is the one in focus. The stock is now above its 200 DMA. It saw large delivery-based buying in the last 2 days. There was 3,000 crores of delivery buying in HDFC Bank. And, the big question is, will the Bank Nifty hit new highs this week itself? And will it assume, take on the leadership mantle for the next leg of the rally in the market? The US markets are shut today for Memorial Day weekend. So there could be a lot of, volatility in that context for our own markets because we don't have any cues from the mother market. But the Nasdaq closed at record highs and Nvidia closed above $1,000 for the first time. So in that context, we've had very, very strong cues from the US markets. Now, apart from the Bank Nifty, the other space I'm watching is pharmaceuticals because two stocks, large caps that have come out with good set of numbers. One of them is Divi's Labs, where the margins have been very, margins came in above 30% after 5 consecutive quarters. So I'm looking at Divi's Labs this morning. And the other one is Aurobindo Pharma, where the results beat estimates. The revenues went up 17%. Margins were higher than estimated. More on that later. But I'm looking at banks and the pharmaceutical stocks today. But other than that, it seems like it's a really strong market. Yeah. Of course, just 1 week left before
that's
the
right.
D-Day.
Yeah, absolutely. So we'll have the crucial election verdict, and also you have the expiry that will play out. So the May expiry will play out, and it's been quite a good one, though at the start of it was quite volatile. So that's going to be another focal point. Now, the Nifty, well, it's expected to consolidate in this range of around 500 to 600 points odd. That's still the expiry day. And then, in fact, post that, we react to what the exit polls have to say. The Nifty Bank, that's going to be the crucial one in there. The Nifty could consolidate a little bit, but if the Nifty Bank wants to head towards that 50,000 odd mark, which is an all-time high, then in fact we could see a bit of a move. Remember, it has to move around 2.5%, which could drive the Nifty much higher from here on, but we'll have to see how that goes. Now, we've been making this point, right? When the FIs are net short by close to around 1 lakh contracts odd, you see a bit of a bounce. And just take a look at that. This is data over the last 1 year or so. 1 lakh contracts, when they're net short, you get a bounce of around 2.5% or thereabouts, so even more, 1.5 to 2.5% odd. And this time it played out no different, because effectively 2.6 lakh contracts, going by the new lot size, well, it's around 1.3 lakh contracts. So even post that, we were up close to around 2.5%. So that 1 lakh net short contract, well, that's actually the trigger to see the markets move up. And just take a look at the short covering. Just in the last week, from around 2.5 lakh contracts, we're down to around 16,000 contracts odd. Now we're on the verge of going net long. So bulk of that short covering bounce has already played out. What do the options data suggest? Since we have expiry, that's going to be important to track as well. The 23,000 call, fair bit of open interest, 20 lakh shares were added. 22,900 put as well. The premium out there has come down from close to 200 rupees. It's at around 107 rupees. And there is writing being seen at both those two strikes, which brings us to the level. If you're looking at a broad band, 22,700 on the downside should be crucial, because when we were moving up, that was a bit of a resistance. So that's important. And going by the options data, around 23,200, that should be the resistance on the upside. So that's a crucial 500-point band. What you don't want to break is this 20 DMA, which is at around 22,450 odd. The Nifty Bank, I told you, that holds the key. Well, the fresh all-time highs are close to around 50,000 odd, and the 20 DMA becomes a reference point on the downside. The stock that I'm tracking is RCF. It's come back to life. In the last few sessions, we've seen a good move on that particular stock. And, in the on Friday's trading session, the delivery was more than 60 lakh shares. We haven't seen this in very, very long. To give you an average for the last 10 days, it's around 7.5 lakh odd. And what it did with this sort of a move, it took out the 20 DMA, which is at around 147, 148 odd. So RCF could be the stock that you could be tracking. Going by the delivery volumes, go by the momentum that the stock has shown. It saw a sharp correction from the recent peak, but now it's coming back to life. So I'll keep an eye out on that one, guys.
Okay, thanks a lot, Nigel, for that. So RCF in focus, and of course a whole host of other stocks as well. But let's see, big week for the market up ahead. Lots of trading to do before that election verdict that happens on the 4th of June, which is a Tuesday, so next Tuesday. And before that, you have the exit polls as well on Saturday. But on the equities front, we have a comment coming in first up from Chetan Seth of Nomura, who says that the markets remain highly sensitive to US data, dancing with it like drunken sailors. They remain modestly positive on Asia, ex-Japan stocks and emphasize focusing on stock selection, but see balance of risks tilted to the upside.
Okay, we also have some opinion from Rupal Agarwal from Bernstein, and this is an equity call. She still sees opportunities within India and reiterates the preference to chase momentum stocks and more quality exposure. Recommends taking profit in high volume, low quality, small and mid cap names, especially the ones which are overvalued and crowded. Bernstein is closer to an inflection point on high volume trades than they were at the start of the year. That's Rupal's view.
Let's also get you some money market news this morning. On the rupee, Kunal Sudhani of Shinhan Bank says the diminished Fed rate cut bets are the outcome of a hawkish Fed commentary and upbeat US economic outlook. He expects only one Fed rate cut for this year. The dollar index finds support at 104.1 while strong resistance at 105.5. The MSCI flows, lower crude oil prices, record high dividend payouts by the RBI are all assisting the rupee. For the dollar, INR 82.95 acts as a support while 83.25 acts as a resistance.
On bonds, we've got Ajay Magnolia of JM Financial, who says that the 10-year yield closed below 7% last week following a huge rally in the Indian market. Liquidity continues to be in a deficit, which may prompt a possibility of bond buyback again by the central bank, although market response for buybacks has been tepid. Reversal of selling by FPIs may also pull yields lower. He expects the 10-year yield to be around the 6.97 to 7.03% levels today.
Well, we have a lot of stock-specific action track for you. We get to that in just a bit in our special Top 10 segment. We'll look at NTPC, Divi's Laboratory, United Spirits, Oro Pharma, Bosch, Torrent Pharma, Kochi Shipyard, Sundaram Finance and Hindustan Copper. All of them will be reacting to positive news flow. While Glenmark's past quarter numbers were a little bit tepid, though the guidance was pretty okay, that stock is expected to open up in the red.